Hello, this is John Kicklighter, Global Head of Content for StoneX, here to discuss the market conditions into next week and the top event risks that global investors will likely be focusing on. Now, looking at the general conditions that we have a dichotomy in conviction. While we are just off record highs for benchmarks like the U.S. equity indices, and volatility has also been quick to vanish, we also have a very sensitive market where we see the pickup in volatility is very abrupt, so a volatility of volatility, if you will. And you're also seeing a underlying concern that some of the things that have been driving that risk-on mentality are losing traction or have lost traction. The AI trade has certainly lost a lot of its glamour. We've seen some confidence in rate cuts translating into systemic growth, also diminishing. Even the abundance of liquidity is starting to raise concerns about deficits in capital flows around the world. So none of these are really offering that platform for escalating the move to the next high. And that's why I would suggest that we have a little bit more concern than we have indicative of just where relative price is. So the type of markets that you want to remain cautious on, and as well, we don't necessarily have a very clear line to what's going to motivate the markets. This is a more difficult thing for particularly traders who are trying to plot out their timing. They cannot necessarily just look to the economic docket and say this very important piece of event risk, let's say like the FOMC rate decision, which we have on Wednesday, is going to definitively be a very market-moving event risk. We have just as much potential, if not more, from headlines, and those are unpredictable. And it looks like the markets are surprised so frequently that they're getting significant headline fatigue. That is a major problem. This past week, for example, the threat of the United States for seizing Greenland was a overriding concern, especially with the uncertainties that it would represent between the relationship between the United States and Eurozone, two of the largest economies in the world. And yet, at the very last moment, after the Davos speech from Donald Trump, it would seem that things have de-escalated. This back and forth and uncertainty about whether it's risk on or risk off is leaving a lot of inertia in the markets, a lack of conviction, which can be difficult to override. So in terms of market approach, it's probably important to be more balanced, not necessarily assuming that we're going to have productive ranges even. Generally in these kind of conditions, looking at the technicals, I would look for range conditions. But when you pair ranges with distinct technical boundaries, with high probability of volatility threats from event risk, whether scheduled or unscheduled, that's more of a breakout risk. But that being said, even if we do get breakouts, we don't necessarily have the capacity for follow-through. It would be nice to see the markets seize on a particular fundamental theme, although we have not seen that in some time now. But we wouldn't necessarily be confident in the conviction that we get if one does arise, because we've seen it just drop off so quickly. So I wouldn't look for ranges, I wouldn't look for trends with momentum, and I wouldn't look for selling volatility, even though that seems to be very popular for those traders out there that do that kind of strategy. It seems like, as the saying goes, picking up pennies in front of the steamroller. Now, in terms of what markets to watch, which can be precursor to the broader markets, I would actually look at price before I look at any of the scheduled event risks or the headlines, simply because these markets are starting and stopping. If we do see that there is continuity or momentum, that would probably do more to explain the market's willingness to adopt those fundamentals than the fundamentals capacity to move the market as the driver. So what markets to look for? I will be watching global equity indices. I think they're very prominently positioned, especially near multi-year, generational, or even record highs. In particular, the S&P 500, the NASDAQ, and the Dow Jones Industrial Average, especially with the earnings coming up. But I also want to keep tabs on the relative considerations, because even if the S&P 500 doesn't move, for example, we can still look at the ratio of the S&P 500 to, let's say, the RSP ETF, which is a equally weighted representation of the S&P 500 components. So you get to see a transition of appetite for market cap versus the dispersion of confidence in the broader markets. Or we can look at the NASDAQ relative to the Dow, the tech trade, although that has certainly fallen off to the wayside over the past weeks. Or we can look at the large cap, small cap ratio, the Dow to the Russell 2000, for example. I'll also be watching outside of just the equities perspective, gold. It is really a tap into the anti-dollar or anti-fiat, and it has revived itself and seized back a little of the confidence and the attention of the broader market from silver, although definitely a market worth watching. I'll also be watching the dollar yen and even Japanese government bond yields because there is a tentative uncertainty in that region. Now, in terms of themes, what should we be watching for? Well, that's difficult because it's not just what we can watch. There's a lot to watch. It's what actually has the capacity to move markets. I will be watching that anti-dollar or anti-America or sell America conviction. That is dollar treasuries and U.S. indices relative to the rest of the world. It is definitely worth watching. There's a lot of headlines around it, but we haven't seen a lot of momentum in that direction. However, with the United States very aggressive pushback against its trade partners, the pressure is there to potentially see this turn into a more significant capital outflow and a sale of U.S. assets, which could cause a lot of uncertainty and backlash because treasuries are still treated as the benchmark risk asset, even though they don't have a AAA rating. All three major credit rating agencies downgraded the U.S. A while ago from the top rating. I'll also be watching Japan. The ongoings in Europe and Davos and Venezuela, for example, take away from a progressive uncertainty that really centers on the Japanese market, one of the largest in the world and one of the largest economies in the world, around the intervention threats. We have the snap election considerations and the pressure between Japan and some of its neighbors like China. This is a major financial center, and things can certainly arise there, and the pressure between the yen and the yields is almost certainly going to raise concern and elicit response from financial authorities. So it should be watched very closely. Aside from that, we will return to some global macro thematics, growth, monetary policy, and earnings this week. So that is certainly on the top of the list, perhaps, of those three themes. The Fed rate decision and the Mag 7 earnings that we have on tap are probably the most capable to move markets. So breaking it down day by day, what should we watch for? What's the top event risk on each of the trading days? Monday's relatively light. We have German business confidence. We have durable goods from the United States. And the U.S. will be selling some bonds and notes, and that's worth watching. 3 to 6 month bills, 2-year notes, and seeing what it's getting the market appetite for and seeing the confidence in that ongoing effort. These can be difficult to access for regular self-directed traders, but you can get some of the confidence of the broader market in the U.S. From these kind of activities. On Tuesday, we have some Asia activity. We have China industrial production. We have Hong Kong trade balance, definitely worth watching. Before the U.S. Open, we have some earnings. We have Boeing, we have United Health, and we have RTX, one of the largest defense companies, certainly all thematically interesting, especially situations in the United States where they were suggesting that they were going to pursue defense companies for their spending. At the same time, they were going to increase their spending, their defense spending. So seeing how that factors into both performance but also outlooks. We also on the docket have the consumer confidence report from the conference board. On Wednesday, that's really the height of activity for the week. We're going to have the Bank of Canada rate decision and the FOMC rate decision. Neither is expected to change, keeping it at 2.5 and 3.75 at the upper end, respectively. But that FOMC rate decision, given the pressure that the White House has put on Jerome Powell, the Fed chairman, and the questions over independence and who's going to be the replacement of the chairman when he retires, that is going to draw out a lot of unique interest around this event. Can it be market moving? Absolutely. What will it be market moving on? It remains to be seen. We need to watch that very closely. After the U.S. close, we have earnings that include Microsoft, Meta, Tesla. That's the number 3, 7, and 8 market cap in the United States. So we need to watch those to see that Mag 7 response after hours and into Thursday's open. On Thursday, Japanese retail sales, housing starts, getting a sense of the Japanese economy domestically and financing. We also have the Bank of Japan buying JGBs. That is the ongoing capital works that they do for a policy activity, and we need to keep tabs on what those levers are doing to be pulled. We'll update as we give some insight onto what that balance is and how unbalanced it actually is. I will be watching Eurozone sentiment surveys, including economic confidence, given the pressure that the United States has put on the Eurozone with its trade relations and its demands. As for earnings, we have Lockheed Martin, which is the largest defense company, but we also have Apple, which is number 3 on the market cap scale. And Friday, Japanese industrial production, again, looking at the Japanese economy, but we do have some fourth quarter GDP figures from Taiwan, the Eurozone, Germany, Mexico. So some big picture readings, though they are a bit dated. We'll see how much traction this actually provides us, as it's not forward-looking, it's very much backward. Earnings, I'll be watching Chevron and Exxon with some perspective to Venezuela. Amex earnings, although not the largest market cap, it is reflective of the proposed cap on credit card rates. So that's definitely another macro theme from the headlines that we will see transposed into earnings. All right, that wraps up for the week ahead. Don't forget to like and subscribe for more financial market insights.